Hey, what's up guys? John here. I saw a video on TikTok that's going extremely viral of a woman and her family going through a very, very challenging time in this inflationary world that we live in. Now, I believe this isn't getting enough attention in the mainstream media. I think a lot of people simply are not talking about the real high cost of living and what it actually takes to make it in America today. But I'm going to show you what's actually happening with a real family in America. And ultimately, I'll share with you what you can do if you're in a struggling and challenging place, and also kind of the trends and what's likely going to be happening in the next year or two. Take a look at this. It's pretty crazy, just how accurate this information really is.
You. And this is how they're doing it. A little over a year ago, my husband made $25 an hour. We lived a good life. I didn't have to monitor the bank account. Things were good, But now he got a new job, thankfully. Otherwise, we would be out on the streets right now making $46.25 an hour. Yet we are doing way worse and not doing anything differently. And here's why. Just a few reasons why, actually. So since then to now, due to the ever increasing interest rates, our mortgage has went up $300 more per month. Our home and auto insurance has went up an additional $90 per month due to no fault of our own. Groceries are an additional $120 a week. That's an additional $480 per month. Internet has went up an extra $60. The price of gas for us to travel back and forth to work we're paying at least $200 more a month there. The electric bill has went up $70 a month, and I'm comparing that to this month's bill last year using nearly about the same amount of kilowatts. So that tells me that the rates have increased, seeing as my usage has not increased. Our water has went up an extra $15 a month. Property taxes have risen an extra $1,500 per year. That's $125 more per month. That's a total of $1,340 per month that I am paying for the same exact shit that I was paying before, for $1,340 less. And then there's shit like this. A case of Coke was $7.50. It's now $12.50. That's like a 40-ish% increase, yet they tell us inflation's at 8%. A box of goldfish was $6.88. Now it's $8.88. A bundle of kale was 78 cents for years. Now it's $1.60. Corn on the cob used to be 5 for $1. Now it's 2 for $1. And the Dollar Tree is now the $1.25 tree, which is a 25% increase. Yet they tell us inflation is at 8%. And it's
I literally got goosebumps. I mean, the lady is like spot on, like right on the money. Everything is absolutely through the roof. 8% is an absolute joke. And people that are, buying that 8%, 7%, we're going to combat inflation, we're going to beat it. There's just no way. There's just no way. Things are going to get harder. And she goes on to say that, I'm not going to play the whole entire video, but she goes on to say that the world's going to get a lot harder. It's going to get a lot harder. It's going to get a lot more expensive. And so what can you do about it, right? Well, let's take a hard look at where America was just 3 years ago, just for context. So the average car payment for a used car in Texas, for example, $375. For a new car, $572. So if you look at just the map of America, it was in the range of about $300 a month, $300, $350 for a used car payment. And new cars are about $500, $550, in that range, right? Well, now the average car payment is $725, right? So literally double. It's doubled. 1 in 6 cars are over $1,000 a month. And Americans got used to spending during the pandemic. Now they're running out of money and racking up credit card debt, right? As we all know. But just look at this situation. Look at how this kind of plays out. So Fed approves the rate hike, right? Taking interest rates to the highest in 22 years. And look at this. A credit card borrower with average of $5,733 as a card balance at a 20.55%. Now that is still a good interest rate in relation to a lot of credit cards. If you actually look at how much the interest rate is, probably 25, 28%, some even now 30%, right? It would take 17 years if you're making the minimum payments to pay it off. Absolutely crazy. $8,400 in just interest payments on $5,700 owed. That is predatory. Yet real wages are falling, right? Real wages are falling, and automation is going to really start taking hold. So people ask, what do you do? How do you really survive this situation that's coming, right? How do you really do it? And it all kind of depends on a couple things: on A, your circumstances and your skill sets, and B, how much you're willing to sacrifice. When I first got in real estate, when I first got started, I was sacrificing. And when I met my wife, we were really sacrificing together. We lived in an $850 apartment in Westwood in Los Angeles, which is a nice area. When I was in, kind of like first getting it going in real estate and first started making some money, $850 a month, and I was making way more than I could have. Way more than most people, and I was sacrificing way more than most people. Like most of my friends were living in Santa Monica, spend $3,000 a month, and back then $3,000 a month for an apartment was absolutely crazy. But yet people are doing it now. I mean, even when we started buying real estate, I was living with there was literally roaches, rats. It was disgusting. But at that same point in time, I didn't have anyone that was going to help me. If things didn't go right, I didn't have anyone that was going to be able to step forward and write me a check, right? And I feel like if you make those sacrifices, I'm not saying to go live with roaches and rats and do all that, but when you're buying real estate deals and you want to make sure that you're picking up a deal in which you can afford and you're not going to, completely renovate a property, put all brand new appliances, put everything into a property, and then someone breaks in and robs everything, and then you're stuck with a fat credit card balance and no appliances and a bunch of expenses, right? You have to make the sacrifices. I made the sacrifices when I got into real estate. I made the sacrifice when I became an investor. I made the sacrifices when I wanted to kind of level up. In America, sacrifices now, people don't want to make them because on social media and a lot of these platforms, people think that everyone just gets rich overnight and everything's simple, super easy. Now this is the next year, 2 years, 3 years, it's going to be the world of sacrifice. Like if you're going to want to get ahead, you're going to want to make big moves, it's going to be really challenging unless big sacrifices are made or unless huge swings in income are going to be going up, right? So with AI and with a lot of these technological advances, there's a lot of ways in which people can make money from home. I believe that the internet is an incredible way to do it because you can reach millions of people for a very, very low cost. I mean, there's ways in which you can create tremendous value. For example, these videos. I filmed this video right now on my cell phone with a $20 microphone and probably a $20, $23 tripod that I got online, right? So you can really supply a lot of value in this economy, in this world today that you couldn't have done 10 years ago. So yes, the cost of living is going way through the roof, right? And people's expectations on the world are definitely climbing as inflation is rising as well. But there's still big opportunities. But you have to understand what's actually going to happen here. Automation is going to play a very, very big role in our lives the next couple of years. There's no doubt. Right now, if you have credit card debt, I mean, there's all these 0% APR cards. Like, I would definitely look at that. Like, why would I want to? If I had credit card debt right now, why would I want to spend 17 years of my life to pay off $5,700? I would never do that ever. Like I would, if I was ever in that situation and I had a 1-bedroom apartment, I would move in the living room, I'd rent out the bedroom, and I would charge $700 a month. And in 8 months, I would pay off my card entirely. Like I would just make complete sacrifices and I would reduce my living standards dramatically if that was my only option to get debt free. But I'm someone that will sacrifice. Not many people are on that page. I get it. But at the end of the day, you're in this inflationary environment, this massive wealth transfer, right? And you don't want to, at least for me, we don't want to miss this, right? Because there's going to be a lot of opportunities to make a lot of money. But look at this, like all 0% annual fees. And some of these are for 15 months, some 21 months, like almost 2 years, 15 months, 21 months. But after that, it's going to bounce to, 15 to like 20, 25% interest, right? So you want to pay this stuff off in advance. But this is what's going on. Like if you have good credit here, I mean, you need like a 700, in most cases, 700, 720 to get approved for these cards. I mean, you can start to roll in some of these high interest cards to these 0% balances. Look at auto loans, for example. I mean, this auto loan, $40,000, which is like basically the average car now. It's crazy. Loan term, 60 months, right? Interest rate's 15%. So interest rate is about 15%. If you're, let's say, subprime or like in that 600, 650 credit score, it's about 15%, right? If you have bad credit, like south of 500, you're looking 22%. It's almost like a credit card. It's crazy. But so on this card, on this car, for example, $40,000 price, 60 months, 5-year term, right? 15% interest, $951 a month. 3 times the cost. 3 times the cost of what a car payment was just 3 years ago. Right? Like you tell me there's not a really big crisis in the auto industry after looking at that. It's absolutely shocking, right? But interest rates, if you have good credit, you're looking at, let's say, for example, you have a 750, 8.75%, right? Or even, 700, right? You're still 8%, 8.75%. So the same situation, the same card with 8.75% is $825 a month. So you save $100 something a month. In actual interest per month, it comes out to $291 a month in savings. In savings, $291 a month over 5 years. Like that money adds up. So, for example, if you had a credit card and you had that credit card payment that you were making on that $5,000 balance, and you could apply that extra principal, I mean, you'd be able to pay this off fast, right? You'd be able to pay it off a lot faster. For example, look at average credit card balance in America, right? $5,900, $5,910 a month. And so $5,910. So if you look at this, $5,910 is 0% interest. If you're paying no interest and you're only paying principal, it takes 1 year and 7 months to get debt free, right? But if you increase this, and let's say, for example, you pay the $291 that you got right here just from saving the auto loan, maybe you rent out a room in your apartment, maybe you make some other sacrifices, maybe you downgrade the car, whatever it may be. But if you can increase this to say $600 a month, right? Then boom, like you're out of debt in 10 months, right? But if you don't do that, let's say, for example, and you have that 26% interest credit card and you're paying the minimum payments of, let's say, $200 a month, I mean, it's going to take 4 years. It's going to take 4 years to get out of debt, right? And most people aren't going to pay 26%. They're going to pay more. And most people aren't going to pay $200. They're going to make minimum payments and they're going to probably pay $150. And it's going to take them, 7 years. So what do people do, right? What do people do? Look at the big opportunities online. That's my opinion. Look at the big opportunities online. Look at past trends of how banks performed and what they did when things got tough. So I saw this. This came out 2008. So this is the great financial crisis, Reuters, right? He said, the tightening lending standards was typical in a weakening economy and creates headwinds that will help delay recovery along with worsening housing slump and still high fuel prices. The tightening of credit was particularly pronounced in the consumer sector where banks increased minimum credit scores required on credit cards and reduced card balance limits. The survey found 65% of U.S. domestic banks tightened standards on credit cards and other consumer loans, considerably higher than the 30% that tightened card standards in the previous survey, right? So this is what's going to happen. We're going to witness this, I believe, again. We're already starting to see it now, but I mean like really, really witness this. We're kind of seeing it. We're reading the headlines. We're seeing this. But I believe it's going to, when these banks start taking massive losses on commercial real estate, all the crisis that's happening there. We already saw multiple banks already go down. SVB, you had Signature Bank, you had Bank of California just acquired PacWest last week. You're starting to see these banks. Credit Suisse just acquired a bank. You're starting to see these banks start to have big problems. And so what are they going to do, right? They're going to look at risk differently. And when you see this, you tell me we're not in the greatest wealth transfer of all time. 41%. According to JPMorgan Chase, there's 50 million residential units in America, but 41% of them belong to mom and pop landlords or individual investment landlords. In other words, mom and pops, right? And so when I think of that, I think of this lady and her husband, right? Think of this lady and her husband. There's tens and tens and tens of millions of people just like her that have a duplex or have a triplex. And they're walking into hard times. I mean, they doubled their income. And they're in a worse position now than they've been in the past. So as Jerome Powell continues to increase interest rates and the world gets more expensive, what's going to happen? They're going to likely start to sell off property. That's what's ultimately going to happen. And if you're a renter right now and you're looking at the world and you're saying this is too hard, you look, sacrifice, you look at opportunities online, try to put yourself in a position to get out of high interest rate consumer credit card debt. If you can take advantage of some of these 0% APR credit cards, you should do it. Like, you should really look into it, because why would you pay someone 20 or 25 or 30% interest when you could pay someone 0% interest and just get on an aggressive pay down schedule to pay down high interest rate consumer debt? But really putting everything in a row. You can even speak to a mortgage lender and say, hey, look, my plan is to buy a triplex or a fourplex. Because if you buy between 1 and 4 units that's considered residential, you can get a 30-year fixed rate loan. Say, this is my goal. Here's where I'm currently at. Where do I need to be to get this deal? And they'll tell you. They'll give you free advice. And you just reverse engineer that plan and make it happen. We're in this great wealth transfer, and I think it's going to get out of control. The next couple of years, I think it's really going to get out of control. It's up to everybody to make really, really smart decisions. I believe credit is going to be extremely important going forward. I believe banks are going to really, really start to reduce risk. So who's going to be the first to get hit with that? People with bad credit, people with average credit. The average credit score in America is a 698. 698. So even if you're at a 700, 710, 720, it's not that great. You want to be 750, 760, 770 at a minimum. So this is the moment. This is the big moment. 2023, 2024, we're going to witness something huge. What do you think about this entire situation? Drop below. Let's have a conversation about it. And if you want to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Go there, schedule a free strategy session. We can see how we can help you. Drop comments below. Let's have a conversation about it. This is pretty crazy.